What is going on, everyone? Welcome back to another video. Can't wait to get into this one with you. Please consider subscribing, and you're really going to like this one. So what we're going to talk about today is Penn National Gaming. And wow, this one is going to be a great one to go over because of how much interest there is in this. So Penn National Gaming, if you don't know already, has taken a huge stake, and it's going to grow into a bigger stake of Barstool Sports. And this one, as they say, is probably going to go to the moon, given the momentum of the trend of betting in individual states, and how that's just going to grow, and how Barstool is going to help it grow. And that is the whole point of them having an interest and take a stake in Barstool Sports, is to help them make a big push on this momentum play towards online betting. So let's get right into it. So obviously, this looks like there's going to be a little bit of a downside compared to what analysts think, but this 150 is what I'm personally thinking Penn could actually reach and get to. So to the moon we go. There are 10 total buys, 3 holds, and 2 sells from analysts. So out of 15 ratings, about 10 or 2/3 are looking at a buy. So this makes it a moderate buy at about 115. And the stock analysis says that this one is a 9, which again, we keep seeing these patterns where these momentum numbers, this one is definitely going to be right around the 8, 9, 10 area, and that is going to be true for a while, I think. So I wouldn't be surprised if this soon gets moved to a 10. Now let's look at the financials of Penn. So as you could expect, Penn was a huge pandemic got hurt by the pandemic play. So they had to shut down their casinos for months and months, and I think that they even had to take out some debt and a revolving credit line. So that was a huge miss on, Penn. They couldn't really do much, but they're coming back, and they're coming back stronger than before, most likely. So even with the 2020 numbers, they were still at about the 2018 levels. So they had to take 2 steps back, but that hopefully is just to take 5 steps forward. So, they had about 5.3 billion in revenue in 2019 and about 3.5 billion in 2020. And that, believe me, it has to do with the pandemic. So this is good and bad. We're probably going to see this number grow because of Barstool and the things that they're working on with pushing their online betting platform. Now let's see the net income, which of course was a loss because, again, this was a huge pandemic play. They had to close down a bunch of their casinos, and it just wasn't working for them early on. For a few months, they were, dead in the water. And, they were somewhat profitable before. So this we should also see as a comeback in 2021 and 2022. Let's look at the balance sheet. Let's dive into these numbers. So it's a big cash pile. It's about 1.8 billion in cash, and that is huge, astronomical compared to any other year that it's ever been for Penn. That's like 5 times more than, almost 5 times more than what it was in the past. So that is pretty crazy. Like, let's see how this plays out and what they do with that. Total current assets is about 2 billion, and then total current liabilities is about 860 million. That's a really good spot. They're in a good spot with their current assets, and that is, their current assets are double than, 2 times more than what their current liabilities are, so they have good working capital. For their long-term debt, as we can see, yes, it still is pretty high. It's not as high as it was before. It has come down, but there is some long-term debt. And they, have also increased their operating lease liabilities. So it seems like they're probably going to be, having to pay more based on their leases, or if they're expanding and opening more locations. That's going to go up too. And now let's go to the cash flow statement. And the cash flow statement obviously is going to start out with a negative income, or a negative net income, because there was a loss in 2020, again because of the pandemic. And if we go down here, long-term debt issuances was about 882 million. So not as much as, some previous years, and they actually did pay off, a quite a large amount, but they still had to, issue debt and pay down debt, but they're consistently doing that. We want to see that go down though. They're just trying to finance their future operations, so it makes sense to do it now at a lower interest rate. This is crazy. So this is most likely where they got all that cash from. They issued 1.2 billion in equity. Why not? Why not take advantage of the Barstool to the moon folks, diamond hands and stocks only go up crowd? Why not, issue more shares and then, get a higher price because Penn was climbing. And out of full interest of disclosure, I actually did own Penn during the pandemic. During the pandemic, it hit a low of $3.75. Wow, you would be a multimillionaire many times over if you had held on to that up until like today or even a month ago. So I actually bought Penn at $13 and I sold it at about 24, 25, so almost double my money. I had about 100% return. That's crazy. And now it's around, as you saw before, like 117 in that area. So I would have made a lot of money off of that, and I wish that I had held on to it. One of the worst things I did. Should have held on. So anyway, they issued more shares, and so that means that they, were able to get excess liquidity, a little extra liquidity, and they were able to do something with that, and they added to their cash balance. That puts them in a great position because there was a lot of interest in this company as far as people buying shares throughout the entire pandemic, and it is still a very hot stock and could hit, like I said, around 150 on the high end. Now let's look at a portfolio of Penn. So if you bought Penn and it's an IPO in 1994 and held it through today, or I should say February 2021, then if you again had invested $10,000, you would today have about $9.4 million. That's almost a 30% compound annual growth rate. And wow, that is incredible. That's up there with like Microsoft and Apple as far as like how good of a compound annual growth rate that is for consistently about 27 years. That's crazy. So let's look at the annual returns. So annual returns, they have had some bumps. Like we could see in its first, 2 years, it was at about 98% and then 232%. And then all of a sudden it hits 197, 161 with not that many drawdowns. 64%, that's pretty big back in 2008, but it really hasn't hit that hard of a drawdown since 2008. And as we can see in 2020, it just went to the moon, absolutely skyrocketed. And even at the end of 2019, they had a good year of about 35%. And even this year, only being 2 months, they're up about 34%. So let me know what you guys think about this, and let me know what you like about Penn. Let me know if you hold on to it, let me know if you held it in the past, and yeah, just really be curious to know. So with that, please do subscribe and let me know what you think.